Hello and thank you for joining our weekly mortgage rate segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage reporter. The mortgage rates continued to leap further up this week. The 30-year fixed rate came in at 4.14%, the 15-year fixed rate came in at 3.32%, and the 5-year adjustable rate came in at 3%. The mortgage rates have been continuing to rise each week with more optimistic economic data being released. Last week, we spoke about the employment section of the Federal Reserve's Beige Book, but we were waiting for the employment situation summary to be released to get a better idea. Well, it had been released on Friday, June 7th, and now we see how the employment section is doing. The employment situation summary for May showed that there were 175,000 jobs added to the economy for that month, which is a decent amount of jobs added, but the unemployment rate went slightly up to 7.6% from 7.5% in April. Along with the amount of jobs added in May, the Bureau of Labor Statistics also updated their numbers from March and April. The updated numbers for March is now at 142,000, up from the 88,000 they had originally told us. For April, the amount of jobs actually decreased from 165,000 to 149,000. But this isn't the final number, as they will update it again in June's employment situation summary. Although there was a decrease in the amount of jobs for April, the number of jobs added each month is a decent amount, and it does support what the Federal Reserve's Beige Book had stated. Next, we looked at the U.S. Department of Commerce's latest report on the advanced monthly sales for retail and food services for May. On Thursday, June 13th, they released this report, which showed an increase in the total sales for retail and food services by 0.6% from April. Since the beginning of the year, the retail and food services sales have increased, except for the small decrease that happened between February and March. After looking at the government's economic data releases, we took a look at how CEOs of larger companies think the economy is going. On Wednesday, June 12th, the Business Roundtable released a report on CEO Economic Outlook, which consists of a survey they put out to see how the CEOs expect their sales, capital spending, and employment to do in the coming months. With that survey, they create a CEO Economic Outlook Index. The survey results show that most of the CEOs think that their sales will increase, that their capital spending will stay about the same, and that their employment will stay about the same, but there are some CEOs that see more employment in their future. For the second quarter of 2013, the CEO Economic Outlook Index had increased from 81 to 84.3. The CEO Economic Outlook Index has been increasing since the last quarter of 2012, so CEOs must feel the economy is slowly gaining its momentum back. Now that we have gone through how the government and the businesses see the economy, let's look at how Americans are viewing the economy. Gallup.com released a poll on Americans' views on what the biggest problems are in the United States on Monday, June 10th. Americans felt the economy in general was the biggest problem, coming in at 25% so far in June. Pulling up just behind the economy is the unemployment and jobs at 18%. And dissatisfaction with government at 17%. These results have come in at nearly the same level since the beginning of the year. Next, we looked at Gallup.com's U.S. Economic Confidence Index and polls, which were released the next day on Tuesday, June 11th. Gallup.com comprises this index through two polls they take. The first poll is on the net ratings of economic outlook in the U.S. This poll showed that 48% of Americans see the economy as getting worse, while 47% see it as getting better, which aren't too far off from each other. The second poll was on the net ratings of current economic conditions in the U.S. This poll showed that 33% of Americans feel the current economic conditions are poor, and 20% see the conditions are good or excellent. From these polls, Gallup's weekly average U.S. Economic Confidence Index actually decreased last week to -7, from 2 weeks ago when it was at -3. Though there may be more optimistic news being released from businesses and the government, Americans are starting to seem more worried about the economy. The stock market and the U.S. Treasury bond yields were on the rise again this week, after the Dow Jones closed on Wednesday, June 5th, at about 14,960. It had come back up over 15,000 during the week. The S&P 500 closed on that same Wednesday at about 1,600 and had come back up to around 1,650 during the week. As for the 10-year U.S. Treasury bond yield, that same Wednesday, it was at 2.10%, and it had come up to 2.25% by this past Wednesday, June 12th. These rising stocks and bond yields are probably more from the outside investors investing in the U.S., since the European Central Bank is still not fully recovered from the euro crisis. Lastly, we took a look at the weekly application survey for mortgages put out by the Mortgage Bankers Association on Wednesday, June 12th. In this report this week, the Market Composite Index and the Refinance Index had both increased by 5% from the previous week. This increase may be for the same reason it decreased last week. People are getting worried about the rising mortgage rates, so now they are starting to refinance and get a new mortgage before the rates get any higher. The Federal Open Market Committee has scheduled one of their meetings for Tuesday and Wednesday, June 18th and 19th. This could be a good thing or a bad thing for the mortgage rates, depending on what the Federal Reserve Chairman Ben Bernanke says in his statement following the meeting. Make sure to tune in next week and to check out our mortgage blog each week on trendingsiny.com to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestateSINY.com.